Hello everybody, welcome back to another valuation investing video, and today in this video I'm be going over Lululemon stock once again. But today in this video I'm be going in very more in depth into Lululemon stock, into all my scenarios I think that could play out with Lululemon. So stay tuned to the end of this video because I think this is going to be one of my best videos and most in-depth videos on basically any stock. So with Lululemon, the reason I'm doing such an in-depth video is because this stock just does not seem to stop going down. Year to date down 57%, and since its all-time highs it's down almost 70%. The stock's at $159 per share. So I'm going to be getting into this video with their recent earnings report, going over that and going into all the issues this company has. Then we going into the financial health of Lululemon. Finally, I'm going to be going into my intrinsic value calculator to see what price I'd be willing to pay for Lululemon stock. And with that being said, let's take a look at Lululemon. As we can see here, Lululemon, like I said, down a lot year to date, very underperforming the market, obviously. Market cap of not even $19 billion. So this company is not even worth $19 billion now. If you don't know what Lululemon is, it's a global company specializing in technical athletic apparel and accessories. So they're in basically athleisure clothing. So with that being said, let's get into this recent earnings report they had about 1 week ago. With this being said, taking a look here, the company now expects annual revenue to be between 10.85 and 11 billion. So they did reduce their outlook, which obviously isn't good for investors compared to its previous outlook of 11.15 to 11.3 billion. So they've reduced their outlook by nearly 300 million on average. That is not good for Lululemon. Also, their annual profit per share is now expected between $12.77 and $12.97 compared with previous expectations of $14.58 to $14.78. So this was a huge decrease in the earnings per share expected, almost $2 of earnings per share decrease. So that is almost a 20% decrease in the outlook just in one quarter. So this is looking really bad for Lululemon. Also, revenue for the second quarter ending August 3rd rose 7% to 2.53 billion, largely in line with analyst expectations. So at least their revenue last quarter did meet expectations, but the earnings per share of $3.10 did beat estimates of $2.88. So revenue came in line, but earnings per share actually did beat estimates. So that was actually surprising to me. So with that being said, let's get into some of the problems we are seeing with Lululemon. First off, they said that they are facing yet another shift today within the industry related to tariffs and the cost of doing business. Me personally, I don't think tariffs is a huge problem for most companies because it's kind of short term, but I'm still going to go over it because for Lululemon, this is going to be a big hit, as we can see $240 million projected with tariffs for the future. That's how much they're expected to having to pay for tariffs. So that is not doing good. And this has played a large part in their guidance reduction for the year. The chief financial officer, Megan Frank, said on the call that the removal of the de minimis exemption, which excluded some smaller shipments from tariffs, will significantly affect the company, representing roughly 1.7 to 2.7 percentage point tariff-related decline in profit expected for the year. So, like I said, normally I don't really love to look at tariffs, but it is affecting Lululemon at a pretty decent scale. Normally, also, tariffs are more short term, but this is affecting them at a pretty good rate. So 2% profit expectations decline from tariffs. That's not good. Also, they have been having some product issues. McDonald, the CEO, said on the Thursday call that he believes the company has let its product life cycles run too long, particularly in its lounge and social categories. So I think Lululemon is starting to realize the problems that their products are having and why their sales are really slowing down. We have become too predictable within our casual offerings and missed opportunities to create new trends. So they're kind of falling behind due to the lack of innovation with their products. He said identifying those issues as the root causes of the company's product challenges in the US. And we'll be getting into that a little bit later, but US sales have been having a very big problem. And that is another reason why this stock has been doing terrible. Also, lounge and social product offerings have become stale and have not been resonating with guests. To regain its US momentum, McDonald's said the company plans to increase its new styles from 23% to 35% next spring. So at least they are starting to try and innovate their products, make new products, and potentially start a new trend, which could potentially help this company. But they did say that they are not satisfied with the results from this quarter. They know the brand can do better. But the one thing I have problems with companies like Lululemon is the amount of competition, and clothing brands are a trendy product. I don't really love to invest in companies that sell trendy products because in one moment, Lululemon, like just 5 years ago, Lululemon was skyrocketing in stock price because of the new trend of Lululemon leggings and stuff like that. But now it seems the trend is starting to decline, also because of some competition. But also taking a look at the US sales problem, this is one of their biggest problems, as you can see here in its most recent quarterly report. Lululemon sales in the Americas region, which is primarily the US and Canada, showed a significant slowdown. Total America's net revenue increased by only 1%. So year over year, it only went up 1%. That is terrible. Comparable sales in the Americas actually decreased by 4%. And if you don't know what that means, it's basically just the sales in existing stores. So this doesn't take into account newly created stores. So you want to see at least increase in comparable sales for a company. And that is a key metric to look at for retail companies. But as we can see here, decreasing by 4% is obviously not good. And as we can see, I want to look at the revenue segments. As we can see, the Americas segment account for the majority of the company's revenue. About 70% of its total net revenue is from the Americas. So you don't want to see your majority revenue segment growing by only 1%. But the rest of the world and international is nearly 30%. So going over to the international sales, this is where this has a bit of light at the end of the tunnel for Lululemon, for why this company can continue to do good in the future because of the international sales significant revenue increase. Lululemon international revenue grew up by 22% compared to the same period last year, which is a lot stronger than the American. Strong comparable sales, a measure of sales at existing stores, international comparable sales increased by 15%. So compared to the Americas, which was a decrease of 4%, at least in their existing stores, they're increasing by 15%. Also, they're focusing on China, which is a major driver for this international growth. Also, expansion into new markets. So this is looking good on this side of international sales for Lululemon. But getting into the competition problems that Lululemon is facing, as we can see here, they have a lot of competitors and a lot of companies that you know. Obviously, Nike, Under Armour, Adidas, Puma, New Balance, and a bunch of other competitors. Also, you have actually competitors such as Costco. I'm pretty sure Lululemon is suing Costco for selling very similar clothing, and just because they're selling it at a much cheaper price. So they're trying to sue Costco for that. But I think this is the biggest problem with Lululemon, the competition. And also, I just don't like investing in clothing brand companies necessarily. So that is my biggest issue. Taking a look at this analysis of the SWOT analysis, looking at the strengths of Lululemon, we can see wide range of high quality merchandise, strong brand, innovative product design. However, this innovative product design has been doing worse. Robust retail store and online presence, strong social media and influencer partnerships. However, this weaknesses is perceived as a high-end brand. They're very reliant on women's apparel. Their women's apparel takes up almost 70% of their sales. So I would like to see a bit more diversification, like we see here, limited product diversification, limited international presence. That is a weakness, but they are working on that, so that is good. Potential supply chain vulnerabilities, that is another problem with tariffs also. As we can see here, some opportunities with Lululemon is building further partnerships, expanding product offerings. International expansion, I think, is the biggest thing Lululemon has to do. They have to expand internationally for this to be worth a buy. However, some threats is intensifying competition, rapidly changing consumer preferences, e-commerce and online retail competition, and supply chain disruptions. But with that being said, let's take a look at the financial health of Lululemon with my 7-step stock analysis. I like to look at this with every company to give us a pretty simplified look into the financial health of a company. And taking a look here, we actually get 7 out of the 7 key metrics as check marks First, the forward PE ratio, this isn't really have much to do with the financials. It obviously does, but it is mainly valuation based. And if you don't know what the forward PE ratio, it's the price divided by the future earnings per share. And as we can see here, the future earnings per share, this means that this is a very low valuation with the forward PE ratio at 12. The market's trading at about a 20 to 25 forward PE ratio, but Lululemon's trading at 12, so this is a very good thing. Also, the return on invested capital is greater than 10%. This is basically how efficient is Lululemon at reinvesting back into the business and getting a good return on that. And as we can see here, 32.6% is very high. So every dollar they put in to reinvesting back into the business, they get 32.6% return on that. So that is very good. We want that greater than 10%. Also, taking a look at the growth numbers, 22 and 23% for revenue and EPS growth respectively. And as we can see here, it continues to grow over time. However, it is starting to decelerate, and that is the biggest problem with Lululemon. The growth is really decelerating at a pretty fast rate, and that is the biggest issue I have. But taking a look at the shares outstanding, I like to take a look at the shares outstanding, and a lot of people don't really know this about stocks, but the shares outstanding is a big deal. If a company is buying back shares, that means you're actually going to own more of this company. So we want to see that decreasing over time. And as we can see here, they are actually starting to ramp up their buybacks as of late as the stock continues to fall. The only problem I have with this is that their cost basis is probably very high due to the amount of buybacks they were doing at such a high valuation. But I do like that they're continuing to buy back at these prices. Now, taking a look at the debt to free cash flow, as we can see here, I want this less than 3, meaning that they could pay off all their debt in less than 3 years with the amount of free cash flow they have today. And as we can see here, they actually don't have any total debt. So that is a very good thing for Lululemon. So it's very unlikely for this company to go bankrupt. Now, taking a look at the expected EPS growth rate, this I'd like to look at to see what analysts believe Lululemon can grow at in the future. As we can see here, they expect about 8% growth in the future. So taking a look here, like looking at the growth estimates, they expect about 7% revenue growth and actually 12.6% EPS growth, but the net income is 8%. I wonder why the EPS growth is so high compared to the net income. That doesn't make much sense to me. So actually, this is technically 12%, but net income 8%. So with that being said, I'm be looking at my intrinsic value calculator in order to get a fair value price for Lululemon stock today. Looking at this intrinsic value calculator, I have 3 scenarios to look at, and with the bear case, I have to do the annual. First thing I have to do is the assumptions for the annual revenue growth rate for the next 5 years. So what I think that they can grow at for the next 5 years. Also, I'm going to do this for the base and bull case. So bear case, there's going to be very conservative numbers. So with that being said, taking a look at my bear case, I believe bear case American revenue growth goes negative. I think that because of lack of innovation with their products, they're going to start to decline in the Americas. I think international revenue growth continues to decelerate to single digit growth in the next 5 years. I think actually this is probably wrong. I think actually 10%. This is my bad. I was looking at the comparable store sales. Right now, they're at 22%. I thought it was 15%, so not single digits. I'm expecting anywhere potentially, yes, 8 to probably 13% that it decelerates to. And then also overall revenue growth goes to low single digits for a bear case. With that being said, I think for the annual revenue growth rate, I think this company will grow at about 3 to 4%. I'm going to be very conservative, 3%. Now for the base case, taking a look at my base case scenario, I think American revenue growth remains almost flat at about 0 to 2%. International revenue growth continues to decelerate to low double digits. I think actually low to mid double digits. So anywhere from 12 to like 16%, I think is going to happen. International sales increase to mid to high 30% of revenue. So like I said earlier, their revenue segment right now, 30% of their revenue comes from international. I think this is going to increase in the future as they start to expand more to mid to high 30% with the base case. Also, overall revenue growth goes to mid single single digits. So with that being said, I think base case, I'm actually going to put 6% revenue growth rate. Now, for the bullish case, looking at this, American revenue growth starts to re-accelerate to low mid single digits growth, anywhere from 2 to 5%. Do I think this is likely? Probably not. But if they start to innovate with their products, start to make more and more trendy clothing styles, then maybe it can start to reaccelerate. Also, international revenue growth stays the same or slight increase. I think it goes from about 20 to 25% if they really start to expand. International sales increase to 40% of revenue, so that is going to really increase the revenue segment and diversify it geographically. And overall revenue growth goes to mid-high single digits. With that being said, I think bull case we can put a 9% revenue growth rate. Now for the future profit margin, I'm going to be taking a look at this profit margin here. As we can see, their margins have been anywhere from about 11 to 16%. So with that being said, for the bear case, looking at the bear case, I think margins start to decline due to competition and lack of product innovation. So with that being said, right now they're at 16%. I think bear case, they get down to 13%. Base case. Now for the base case. I think margins barely decline due to competition and lack of product innovation. So for that, I'm thinking I'm gonna put 15.5%. Now for the bullish case, I think bullish case margins remain similar or even slightly higher actually. So with that being said, I think actually that this company can increase their margins to 18% if they really start to innovate their products good enough. Now for the bear case future PE ratio, I think for the future PE ratio, this company growing at 3%, very low PE ratio, market trading at about a 25 PE ratio with the average S&P 500 growing at about 10 to 15% with the huge big tech companies really carrying that revenue growth. But for the future PE ratio, I'm thinking 10 or even 12 or around that area. Be conservative on the bearish case. Base case, I think a company growing 6%. I think a company like this should get a 15 PE ratio. Bullish case, I think a 20 PE ratio. Now for the shares outstanding. I think for the shares outstanding, I think they're going to be buying back at about, let's see, they've been buying back at about 2-ish%. So with that being said, bear case, I think they buy back at 1%. Base case 2%, bullish case 3%. And with this being said, I actually get a pretty good valuation for Lululemon. Bear case, I get a negative 1% return. Base case 15.3%. Bullish case 30.76%. However, I do think this PE ratio could potentially be high, or even the profit margins could be high because they are starting to decrease now. Those numbers aren't necessarily updated. With thinking about tariffs and stuff, I think this could get to 14%, honestly. So with that being said, 13% return. I still think I'm a little bit worried about the future with Lululemon, and the biggest thing with a stock is the future growth rate of a company. That is what really gets you a great return, not buying companies at insane undervaluations. I'm not saying that you're not going to make a good return on this company. With this, I get about a 13% return, but you got to really believe that they're going to still internationally expand and the Americas remain similar or even grow. So with that being said, honestly, right now, I'm just not interested in Lululemon stock today. I just think there's too many challenges in the future with the competition, with lack of innovation, and I just think that clothing brands are very trendy, so I think it's hard to get a good return on companies like this where the trend is basically gone already. The trend has basically peaked, I think, but I'm not sure. So with that being said, right now I'm not buying Lululemon. I'm staying away just because I think the future, I think this stock doesn't look great because of the future problems this company will have. And I just think there's a lot of better opportunities out in the stock market right now that you can buy that has a much brighter future. So thank you guys for watching this video on Lululemon stock. Please subscribe, hit the like button, comment down below, and see you guys later.